Hello everyone, and welcome to Crossover Mind. Today, we're diving into Tesla's Q3 2025 earnings report, a release packed with ambitious visions and challenging numbers. I'm your host, Steve, and I'll be looking at this from a technology and long-term perspective.
And I'm Lisa. I'll be bringing the financial and market analyst viewpoint to our conversation. It's great to be here. Steve, on the surface, this was a quarter of new records, but the details seem to tell a more complex story.
Absolutely, Lisa. Record deliveries, record free cash flow, the headlines look fantastic. But Elon Musk's opening remarks immediately shifted the focus. He didn't lead with car sales, he led with real-world AI. He's framing Tesla not as a car company, but as a leader in artificial intelligence. From my perspective, that's the single most important takeaway.
I agree that's the narrative, but as a financial analyst, I have to start with the numbers. Revenue was up 12% year over year to $28.1 billion, which is solid. However, operating income dropped by a staggering 40% to $1.6 billion. The operating margin is down to 5.8%. For a company that once boasted industry-leading margins, that's a significant contraction. They're selling more but making less profit on each sale.
That's a fair point, but it's crucial to understand why. Musk was very clear that he was hesitant to expand production until he had clarity on achieving unsupervised full self-driving. Now that he feels they have that clarity, he's hitting the accelerator on expansion. The increased operating expenses, up 50% year over year, are driven by investments in SG&A and, critically, R&D for AI, FSD, and Optimus. It's short-term pain for what they believe will be an unprecedented long-term gain.
Unprecedented is the key word, and it carries a lot of risk. Let's talk about that FSD and Robotaxi promise. They expect to have no safety drivers in parts of Austin by the end of this year. That's a huge milestone if they achieve it. But the report also notes that the total paid FSD customer base is still only around 12% of their fleet. The Robotaxi business, while operational, is currently a cost center, included in services and other. How far away are we from this being a meaningful revenue stream?
Musk described the full rollout as a shockwave. The idea is that millions of cars already on the road can become autonomous revenue-generating assets with a software update. The killer app, as he put it, is simply being able to text while in the car. He believes demand will be pretty nutty. The real progress isn't in the adoption rate today, but in the capability of the tech. They're deploying version 14, which shares a lot with the Robotaxi's core model, and they've surpassed 6 billion miles of supervised FSD driving. The data flywheel is spinning faster than ever.
And spinning up costs. Let's not forget the huge bet on their custom silicon, the AI5 chip. Musk claims it could be 40 times better than AI4 and perhaps 10 times better on a performance per dollar basis. That's incredible, but it's a future promise. They are spending billions on R&D and future capex for this. Meanwhile, they're facing over $400 million in tariff impacts this quarter alone. The near-term financial headwinds are very real.
This brings us to Optimus, which Musk calls the biggest product of all time, and more colorfully, the infinite money glitch. This is where the vision gets truly mind-bending. He's talking about a world of sustainable abundance where poverty is eliminated. He said Optimus V3, coming in Q1, will be so realistic you'll need to poke it to believe it's a robot.
And as an analyst, I have to ask, what's the timeline to monetization? They're hoping for a production start towards the end of next year for a product that has no existing supply chain, immense manufacturing challenges, and an unproven market. The plan to build a 1 million-unit production line is audacious, but the path from a cool prototype doing kung fu at a movie premiere to a profitable mass-market product is incredibly long and expensive. The projected substantial increase in capex for 2026 confirms this.
But no one else has all the ingredients: the real-world AI from the car fleet, the advanced electrical and mechanical engineering, and the proven ability to scale manufacturing. He explicitly mentioned that legacy automakers like Ford or GM have no comparable robot program. Tesla's building the future from scratch because they believe they're the only ones who can. It's a high-risk, high-reward strategy, but the potential payoff is astronomical.
Let's also touch on the energy business. It was a bright spot this quarter, with record deployments and gross profit. It's a solid, growing business that provides some ballast against the volatility of the auto segment. The new Megablock product and the plans for Megapack 4, which incorporate substation hardware, show real innovation in a tangible, profitable market. This is a part of the Tesla story that probably deserves more attention.
I completely agree. It's a core part of the mission. Musk pointed out that battery storage can effectively double the U.S. grid's output without building new power plants. It's a direct enabler of the renewable energy transition and fits perfectly into their sustainable abundance mission. It's less speculative than Optimus, but just as world-changing in its own way.
One final point that caught my attention was the closing of the call. It was a strong plea for shareholders to approve Elon's compensation plan and re-elect board members. Musk's concern about being ousted after building a robot army is a rather unusual statement for an earnings call. It highlights a potential governance risk. He wants a strong influence in the mid-20% voting control range, and this compensation package is the vehicle to get there.
I saw that differently. I saw it as a leader ensuring the long-term disruptive vision isn't derailed by short-term focused advisory firms like ISS and Glass Lewis, whom he called corporate terrorists. For a company making multi-decade bets, a stable visionary leadership is paramount. He is essentially asking shareholders to choose between a long-term world-changing vision and a more conventional short-term financial approach.
And that really is the perfect summary of Tesla today. As an investment, it's a choice. The Q3 results show a company facing margin pressure and rising costs while simultaneously pouring capital into future technologies like AI, robotics, and autonomy that have no guaranteed payoff. The numbers right now are challenging.
But the vision is more compelling than ever. If you believe Tesla is just a car company, you'd be worried. But if you believe they are on the verge of solving real-world AI and deploying autonomous robots at scale, then the current financials are just a footnote in a much larger story. This quarter was all about reinforcing that long-term narrative. Thank you for joining us again on Crossover Mind. At Crossover Mind, we provide the latest information on technology, business, and society, and delve into important themes beyond them. Don't forget to subscribe to our channel. Until next time, look forward to it. Goodbye.